Let's keep it going at this moment. So we just went over, of course, our natural. Now, something we want to look at is, of course, past chart history. Past chart history. Previous spiking highs. Previous bounce areas. Right? These are all going to be areas where we want to say to ourselves, where can we bounce at? Where are we going to hit resistance at? Where should I get in at? Where should I be able to trade this play? So again, we're going to look at some examples from today as well, but previous past chart history pattern really comes down, and a lot of times it comes down to spiking. How high is a stock going to go up to? So for example, if I see a stock that has spiked in the past and it starts dropping its way on off, and then let's say a few months go by and the stock starts moving its way on up, when a stock comes back up to the old price spiking high, it usually ends up falling back on down right around that price. So we always like to look at previous spiking highs, because where it's spiked at in the past is usually where it's going to try to spike again in the future, and that's where it usually starts dropping on off. We can see this not only on the intraday chart, but we can also see this on the daily chart as well. And this is going to be great areas for support and resistance. Now, something I also want you guys to know is support and resistance work together. And what I mean by that is what? Is that these plays, if you see one line, let's say, okay, we could just have right here on AREC. AREC, yes, we have natural support at 325 and natural resistance at 325. But since it held up in the past right here, it's also going to hold up as our support line. So past chart history pattern and natural support could be hand in hand. Let's look at a few different examples, see what we can have at this moment. We'll make the daily chart big as well, just to see if we can come across any of those big ones. So let's see right here on RAVE. RAVE, you can see again, little side note, $2. $2. Why did it get held up right at $2? Natural resistance line. And also again, notice what happened right here. It bounced that $2 underneath $2, break of $2, hit $2. So again, $2 had a lot going on there. Let's see if there's anything else on some of these other plays. Perfect example is again PECK. Can anyone tell me maybe why PECK spiked all the way up towards around this $14 mark today, or right around $14.25? Other than it being natural resistance, this stock right here did what? Notice that we spiked right up towards that mark. Is it a coincidence that a few days before that we spiked up to where? Right around that mark. Why is it that we are again falling right around this area? Because before we fell right around that area. So we do see this a lot, where if you see a big time spike, you want to look at past chart history pattern. And the past chart history pattern is going to help you be able to determine how high a stock could possibly go. For instance, SUNW. Look at these two upper shadows yesterday. Why did SUNW spike up towards around 350, natural resistance, and what happened when it came up yesterday? It hit 350 and started falling on down. So let's actually look at this chart, past chart history pattern. Let's turn off pre-market here for a moment, and we can make this chart a little bit bigger, maybe in about a 10-minute time frame. Let's actually make this a little bit larger. Actually, let's go 350. We might be able to get it, right? We actually got it here. And what do we see? This was from, this is from 9-28. Right? This is from October 6th. So you could see there's a big difference between, again, this is about a week and a half difference right here. But what we have is, there's the top right here. And look what we have in our past chart history pattern. There's the top right here. Now, guys, don't overthink this. Right? Don't overthink this. Don't say to yourself, okay, hey, all right, Deck said again, always look for, again, past chart history, pattern resistance. Okay, I'm going to do this little upper shadow. No, that doesn't match with this upper shadow. And that upper shadow doesn't match with that upper shadow. Because I know there's a lot. Most of the time, guys, you just want to do the clear-cut upper shadows, right? The clear-cut tops. Excuse me there. So, the clear-cut high of the days are absolutely great, where we know what happens. Even though this is a weak difference, we know that this is going to be a very nice resistance line. But even if you find and you say to yourself, hey, there's a little bit of an upper shadow right here, there's a little bit of support right here, you might be able to see a horizontal line carry all the way across. And what I mean by that is we can look at this play and we can say, look at those top upper shadows. Please, again, in one moment, traders. Woo! Lesson time. Let's do it. I'm like crying over here. All right, so what do we have? We have this top upper shadow. And notice again, that goes with, again, these candles right here. But notice why if you follow this path all the way across, what does it also lead to? It also leads to this support line right here. So sometimes you can find support just from looking at previous support. And if we actually scroll this back down even more, is it funny that, this old high right here, these old highs right here are also these old highs right here. And finally, when we do break this high, it actually holds up as our support line right here. And it's like, boom, someone insert that like gif of the mind blowing, like, what? Right? So, I mean, you can be able to determine, right? You can be able to determine, these candles very great to know where they're going to be bouncing back on up. Now, again, the thing that people always ask me, well, Dek, what if this, are we supposed to go exactly at, the upper shadow, or are we supposed to go at the body? Are we supposed to, again, go on this upper shadow, but then again, we have to match this little body, and then this little, body of the candle with this upper shadow? Don't overthink it in that sense, right? Just have, great parameters. What I usually do on this is I always go to the next natural resistance or next natural support line. So what I have right here, if I see that this is a top right here, I'll put it right here and I'll say to myself, all right, hey, this is right around 345, 346. But I'd probably just round up in my eyes and say, hey, you know what? 350 resistance on SUNW. Then SUNW doesn't really do too much. It starts having a big spiking day. And what do I say to myself? If we only have, let's say, this spike right here, I'm saying to myself now, hey, guys, last time it spiked up to the high, it got up towards around 350. Now, this stock doesn't get exactly up to 350. It gets up towards around 340, but it gave me enough of a game plan to be able to figure out what I want to do on that stock. So it's not going to be exactly, oh, Dek, this stock came up to 1181. Oh, nope, in the past it came up to 1183. It's like, it's the same, that's the resistance line that you want to be sticking with. So it's not going to be picture perfect laid out for you, but you can be able to get, great parameters on where that stock was able to get up to in the past to know where it's going to be coming up, sometime in the future. So, let's keep this going here. What's the last thing that we need to be going over on these plays right here? The last thing we need to be going over is not only, of course, our natural past chart history pattern, but this is also going to be detailed. Okay, so what's detailed now? Well, detailed is going to be anything that we kind of have to look up. Detailed is going to be the 50-day moving average, 200-day moving average, 13 EMA, the VWAP, right? Our indicators. This may be a previous high, a previous low, a 52-week high, the open, the close, right? So detailed is going to be more along like the indicators. Now, why do we use indicators? If you're saying, Dek, does the 50-day moving average, 200-day moving average, 13 EMA, and VWAP really mean anything to you? To me, they don't really mean much at all. I only use them because everyone else uses them. And since everyone else uses them, they hold up as support and resistance lines for us to be able to make money. So if we take a look on this stock, let's go back to, let's just say, a 2-minute time frame. What happens when we're looking over at the VWAP, and the VWAP is this black line? What happens every single time we hit this black line? What has happened every time we hit this black line? It hit it, got rejected. It hit it, got rejected. It hit it, got rejected. So in my eyes, if I'm in at 320 and I'm holding the stock and it keeps running, where do I think I want to sell at? I probably want to sell somewhere around 380. It's common sense. Don't overthink this stuff, team. A lot of people say, maybe it'll do this and break out and get this nice rip and run. The thing is, don't overthink it. If we see right here, what is happening? PECK hits the black line, starts falling. Hits the black line, starts falling. Hits the black line, it starts falling. What happens? When you break resistance, you do get a big time breakout. But guess what? You're back underneath, this VWAP, so it hits the resistance, starts falling. Hits the VWAP, resistance starts falling. Make sure you guys, get that. That, the VWAP is going to be, and all indicators are going to be more along the lines of support and resistance. Just like the 13 EMA holds us great support. Let's see what we have right here. Can I get any sort of great plays or kind of great charts right here that are showing us some support and resistance? I mean, we've been having so many breakouts. So many of these plays are above their support and resistance lines. If I go down to the top losers, usually a lot of those plays are the ones that, ran up to some old spiking highs of support and resistance. Like if EEX ever ran up towards around like 441, that's where I'd probably want to be looking to sell this play, right? We can take a look, underneath this green line, the 13 EMA, that holds up as a lot of resistance. Just a little side note, past chart history pattern, look at all the spiking highs right around 105. That's holding up as, going to be some sort of resistance. ACRX, notice again, when you come up towards around the 200-day moving average right here, it's holding up as some sort of resistance. Notice when we come back down and we bounce off the 50-day moving average. The best way to honestly see these guys are kind of get away from the penny stocks, because penny stocks are so so active, and look more towards the blue chips. The blue chips are great with bouncing off their moving averages. If you want to take a look at Tesla is very kind of clean cut. Hey, we bounce off the 50-day moving average when we touch it. I actually made over $44,000 on Tesla last week when I bounced off the 50-day moving average. Who was here when I did that? I live streamed the whole entire trade, made $44,000. Tesla bounced off the 50-day moving average. I got in at the price of $361. I held this stock and it went all the way back on up. I was able to make 44 grand. So, that was an amazing play. If we look all the way at past chart history pattern right here, guess what? It bounces right off that, again, 200-day moving average. So these are, again, a little bit more detailed support and resistance lines, but these are, again, support and resistance lines that are going to be able to help you be a more successful and consistent trader. So these are, again, I didn't even put any sort of examples of the natural past chart history pattern or detailed because we have examples every single day. That's how stocks trade. So I didn't have to do research and look for trades. It's like whenever I did this presentation, I knew we were going to have every single one of these support and resistance lines because that's how we trade stocks every single day. So the key to success, team, in, again, stock trading is master support and resistance. Once you master support and resistance, stock trading is simplified. How are we going to do that? How are we going to be able to master this? Well, of course, practice. And why do we want to do it? Well, because we are always able to understand then. We want to buy at support, or we want to do what? We want to buy at the break of resistance. We could also, again, short at resistance or short at the crack of support. So this, again, opens the door for us for so many different areas. Now, one way that we can always be able to make money is we always want to be looking to be trading channels. Now, again, when we trade channels, team, channels is going to be very simple and easy support and resistance, but this is going to be able to tell us how to be where to basically be buying and selling. So whenever we see a stock that's a top gainer, this does not work for stocks that are very low in volume. This does not work for stocks that are, going to be kind of like down 10% and you're like, oh, Dek, we're in a channel. This is for top hot gainers, big volume, big attention. Everyone's looking over to them. If you see a stock on a big morning spike, and the stock starts finding support, resistance, support, and resistance, we can make a ton of money. Same exact thing if later on this big time spike starts crashing and we have support, resistance, and resistance, we can make big time money. But this is from a channel. So what is a channel? What's the point of a channel? Well, once we establish what support and resistance is, we can bank off these plays. So what do we do with a channel? We buy at support, we sell at resistance. We short at resistance, we can cover at support. We buy at the break of resistance, short at the crack of support. Now I know this is a lot right here, so let's start talking about all these different, channels. Let's start talking about all the different things we can do on a possible channel. So let's say again, these are all, for example, top gainers. These are all top gainers. What could we do? Stock starts spiking on off. It hits its high of the day right here. This establishes our resistance line. So once we establish our resistance line, the stock starts coming back on down. We can look at natural support. We can look at past chart history support, or we can look at detailed support. We could look for an entry right here. Boom, we're in. Where are we selling? We are selling, of course, back up to the top. Stock starts coming back on down. We can buy right here. Boom, we're in. We could sell right back up at the top. Stock starts coming right on here. Boom, we're in. We could sell right back at the top. Once we see it break, once this line breaks, once this resistance line shatters, guess what happens? Big time buying volume, we can again look for an entry here. So look at all the different areas we could buy the stock on the long side. Dip, 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 breakout. You want to get the breakout, you wait for resistance to break. You want to get in at support, you wait for, again, the dip on the bottom that has been established 1, 2, 3 different times already. Where else could we do this? If we want to short this play, the stock spikes on up, it's going to be a little difficult to, of course, be able to say to ourselves, hey, you know what, I'm not sure exactly how high it can go. Now, if there is past chart history pattern, if there's an old spiking past chart history high, if there's detailed resistance, we could again short this play right here. As the stock starts coming back on down, we cover here. The stock starts moving back on up, we can again short right here. We cover here. We short right here. We cover here. And again, we don't want to short the moment it breaks on out. But look how much money we can make on a predictable scale. Shorting, buying. If you are really good, you can again buy the breakout, short the dip, buy the dip, sell, then cover, then short it. I mean, there's a lot you can do right here, right? So it's basically buy, sell, short, cover, dip buy, back up, sell, short, cover, dip buy, sell it, short it, cover at the bottom, breakout. These are all the different things that you guys can be doing. It's the same concept over here. When again, we're shorting here, shorting here, shorting here. And where again can you hold the short for the big time crack? When this line finally smacks through. So a break of resistance, you get breakouts. Crack of support, that's where the stock starts cracking down. But still, you can still do the same exact concept as we talked about before, which is looking for dip buys here, looking for dip buys here, looking for dip buys here. Channels are going to form a lot on our top gainers. Channels are going to form a lot on our top gainers, and if you guys can recognize our channels, you guys can make a lot of money. So it always comes down to watching for, and channels usually last about 3 to 4 touches. So even in these examples, we have a 1 touch, 2 touch, 3 touch, and then we get our breakout. Look at, we have our 1 touch, we have our 2 touch, we have our 3 touch, and then we get our breakdown. So this is usually the same exact concept when we're looking for either breakouts or breakdowns on our channels for either longs or shorts. This is great areas for dip buying. This is great areas for able to have some sort of resistance for some shorting. Now, is there anything that we can see maybe channel wise on today? Well, let's check it out. Let's see, is there any sort of channels that are jumping out, at us? PECK, or excuse me, RAVE. Is there any sort of channel right here? No, RAVE has just been some sort of big time crash. AREC, is there any sort of channel right here? No, again, AREC still trying to form more of this U-shaped pattern. No clear-cut channel at this time. UAMY does have a little bit of a channel, right? If we have our top resistance right here, we have our bottom support right here. We can go ahead, put in our bottom support line. I always just like to put that in blue. We put our top resistance right here. We can put that right in red. And now, as you guys can see, I could look for an entry at 54. I can sell at around 65. If again, you could get all the way down towards around 56, sell it back up here, nail it out of dip buy down to 53 cents, try to hold it back on up. So you could see these channels developing. Now, the best area is always short at the tops and get in at the bottoms. Those are always the best areas that you want to be looking at. PECK, again, no real clear-cut channel. That's been U-shaping as well. OPTT, that's been more of an uptrend play. So what we could do if you wanted to, though, you could say to yourself, hey, I see a channel on OPTT, because as we talked about before, not every single stock is going to be doing what? Not every single stock is going to be moving sideways, right? Some stocks are going to be doing what? Moving a little bit more horizontal. So look at this play, actually. If we, again, want to form a channel, we do have our bottom support right there. And then don't we have our top resistance right here? Just because, the stock is not moving sideways doesn't mean it's not in a channel. We still have, and we could still follow the same exact concept. Where it comes down to your support, we can look for an entry. Then we sell it and short it. Then we buy it and dip buy it. Then we sell it and short it. Then we cover and dip buy it. Then it comes on up, and guess what? Just like what happens when we crack our support line, the stock starts fading on off. So you guys can see right here, this is another great example. Now, let's go back over towards our presentation. And if we go back to our presentation right here, we can see that when we take a look at these plays, we always, as I said before, we always want to be looking for shorts in this top row or selling in this top row. And we want to be looking for our dip buys, where at? In this bottom row. Okay? This is where you want to be getting in. This is where you want to be getting in. Right? Same exact thing with your shorting. You want to be able to get in at the tops right here. Now, the reason I say that is because there's going to be a big no-no area. I'm going to put this in yellow. The no-no area is going to be anywhere in the middle right here. So we want to avoid the middle of channels. So every single channel you guys look at, I apologize if that's blinding you guys at the moment. I'll put it in purple right here. This is the no-no area where we never want to get involved with a channel. The most predictability we can have in a stock trade is when the stock is at the very bottom. Let's just look at this example down here. Is when the stock is at the very bottom and when the stock is at the very top. So again, the very tops right here is where, of course, I'm going to be able to make some great cash. The very bottoms is where I'm going to make a lot of great cash. But if I am buying, and again, I'm on the bottom example right now. If you guys are buying at, let's say, the middle, I have no idea if this is going to go up. I have no idea if it's going to go down. You don't ever want to, you want to avoid the middle at all costs. Where you want to be getting involved with these plays is going to be at the bottom and you want to be at the top. You want to be at the top or you want to be at the bottom. Avoid the middle at all costs. And this is, again, going to help you become a much better trader in the stock market. So you guys are going to be able to nail these plays and become much, much more consistent. So this obviously is kind of leading up towards our next lesson, which is going to be dip buying, learning how to dip buy and learning how to be more successful in your dip buying, because now, guess what we just did? We were able to understand support and resistance much better. Now, what did we just do? We're able to, again, look at support, look at a chart, and be able to say to ourselves, wow, okay, hey, I see this channel. And the goal is to be able to look at this chart right here and be able to know that there's a channel hiding inside here, before you put those lines. When you take a look at AREC, when you take a look at these plays and say, okay, hey, I understand that VWAP is the main support line. Oh, I can understand that $5 is a top, support resistance line of natural resistance. Hey, okay, I can see that this stock had the open. The open right here is detailed resistance and support. Is there a reason why AREC opened up right around 312 and then it also started bouncing right at 312? Well, again, that's detailed. Old resistance, U-shaped pattern breakout now holds up as support. It opens up the whole entire stock market for you, as now you know exactly where stocks are going to be buying, where people are going to be selling, and where you're going to see the moves up and where you guys are going to see the moves down. So it's so awesome to see. Now, I do lessons like this every day now on tradecaster.com. We are going to be, again, doing our boot camp and finishing our boot camp every day, doing lessons just like this. So make sure you guys are logged on every day, tradecaster.com. Awesome, awesome lesson right here to be able to predict the stock market and be able to figure out what's coming on up next. So predicting the stock market, a lot of times, is just learning the fundamentals and learning the right way to look at the charts. So awesome work, awesome job. If you have any questions, please let me know. But great lesson today.